First of all, I'd like to say hello to everybody on the line. We're very excited to be here and be partnered with Snowie, so thank you for having us. And I have myself, Eric Whitfold, our Director of Business Development, Ken Brokaw, and our Vendors Relations Manager, Colton Lima, here to field all of your guys' questions.
Perfect. Well, thank you very much for coming on with us. I had to give everybody a little background. Lease Station had contacted us and felt like they had a lot of things that they could benefit all of our clients with, and so we wanted to make sure that we did a webinar like we did with Paramount Financial last year and be able to give them a voice. Lyle, anything you would like to touch on before we get started, or?
Well, really just an understanding, if we already have Paramount Financial, why are we going with Lease Station? And one of the things we have discovered over a period of time is that each finance company has unique niches and markets that they appeal to, different limits, different ways they underwrite in determining who they'll work with, their definition of customers. So we felt like it was just a better fit for us as an organization to have two companies with different approaches and ways of doing business, and that was the reason why we're bringing on a second company. Both excellent companies, just two different approaches to it that fit our needs a little bit better, or our customers' needs more correctly. So that was all. I just wanted to explain why we're doing a second company.
No, that's great. Okay, Eric, I'll go ahead and turn the time over to you, and I'll kind of scroll through this page. Before we get started real quick, I wanted to let everybody know, when you look at our products, let's just go to a kiosk here real quick. It currently has a link for, we were trying to build this stuff as quickly as possible, but it still has a, oh look, Jason worked some magic this morning. Never mind.
You guys rock.
Now, this link will go to Lease Station now. So if you want to be able to kick off, if you click on here, it's an application form. It goes to them. You get a response very quickly. And they actually work an algorithm. If you see this up here with Paramount, we actually put a static price. We worked out an average, and really they're kind of working with a similar algorithm. Obviously, the number was the same, but they're actually working some math within this link, which is kind of nice. And anyway, so if you were to click on these, that will actually go to their application. I was going to say that currently the only place going to Lease Station was on our financing page, but now it looks like all of our products are going there. So here we go. And Eric, I'm going to turn the time over to you and go from there.
Yeah, that's absolutely perfect, and thank you guys. We were all kind of shocked that you guys were able to get all of this done overnight and that everything was live and working and functioning properly here this morning. And Lyle pretty much hit it on the head that all of the brokers or finance companies have a different niche. And ours is essentially trying to be a one-stop shop for all of Snowie clientele. Basically, day one in business, working from home, to the ever-expanding entrepreneur that we can basically help. We have 19 different funding sources at our disposal. So basically, no matter the scenario, we will most likely be able to have a home to be able to put that financial needs. And the only spot that I didn't see the buttons there that I'm going to be excited to get them on is actually the ice shavers themselves. So not only the kiosks, but basically, again, for the expansion or for maybe the existing shops that just need one ice maker, we can finance down to as low as $1,000. So that should pretty much be able to help the full realm of all Snowie clientele.
Yeah, and that was a big thing for us too. I'm just going to touch on that. Where with Paramount, I believe our minimum was $3,000. Am I right on that, Lyle?
It used to be $2,000, but I think they bumped that recently to $3,000 because we had a scenario where we had to go to a $3,000 minimum. So, yeah, and that might have been there's a $2,000 minimum, but I think it depends on what your credit score and your time in business affects that. But never did it go below $2,000.
Perfect.
Yeah.
All right.
Yep. And thank you guys for that. And that's exactly where we've seen tremendous growth and success within this vertical that you guys are in, to being able to help everybody out. And it's absolutely just a wonderful thing to be able to accept all credit scenarios and all the way up to your guys' biggest kiosks that you guys offer. We want to make sure that we're here to serve everybody and try to set the customer service bar as high as you guys expect it to be and make sure that we deliver. Some special programs and things that we've done with our funding sources for your guys' specific industry, somewhat similar to Paramount. We do have the seasonal payments, which is very nice for your industry, especially for the Midwest and the East Coasters out there that can't work through the winter. They're able to have smaller payments for 4 to 5 months out of the year, and then there's summertime when the units are actually producing more income and more profit. You're able to kind of be able to swing your normal business needs and be able to budget more properly. One of the most fantastic programs that we just launched here a couple of weeks ago is a 90-day deferred program, where there is no money initially out of pocket, and you also do not have your first finance payment or your repayment for 90 days after you receive the equipment, which is essential for our startup businesses because they're going to be spending much of their capital on getting started and all of their normal business needs. To be able to not have payments on their equipment for 90 days is absolutely essential to their success.
Awesome. And that was something that we really wanted to bring back too. Originally we were doing that with Paramount, and then that kind of fizzled out. And with you guys bringing that back to the table, that was a big plus for me.
Yeah, and I'm very glad to hear that. We've had a ton of success, especially, like I said, in our seasonal vendors or seasonal entrepreneurs and business owners. It's very, very hard to make it through the fall and winter months there and keep your doors open and be successful if you've got the same payment or payments and you're not able to generate revenue off of that equipment. So I encourage everybody that's on the line or all of your guys' clientele, even if they're just barely entertaining the thought of possibly opening up a shaved ice or snow cone business, to please definitely give us a call directly, fill out that application. My mom always taught me the answer is always no unless you ask. So we're definitely here to educate everybody as much as possible, help them walk through the steps on getting financed, health county codes, which I'm sure you guys are familiar with. I know we touched briefly on that for some of the shows and what we're going to be doing here in February when we come out to visit you guys. Yeah, we're absolutely excited, and to be able to help the group of people that have 580 FICO scores and bankruptcies on files all the way up to the 850 AA paper credit, to be able to help them all out. I'm really excited to see Snowie grow even further, if that's even possible to imagine.
Yeah, we're excited for the same thing. And also, just to touch on that, what Eric was referring to right there, let me go there quickly, is you'll see the banner on our homepage. We have a training coming up on the 5th and the 6th. That was a wonderful training last year, and we're doing it again this year. And Lease Station is actually going to be on site. So for anybody that would like to work out equipment and leasing, they can work it all out right there. And even better, you can do the 90-day deferral at that point and not even start making payments until May. So anyway, that could be a huge benefit.
Yeah, that's absolutely.
Sorry, Aaron, clarify, you just said 5th and 6th. Make sure they understand. That's February of 2015, not October next month.
True. Okay, thanks. Yeah, I put this up here. Yeah, February 5th and 6th. We'll have a whole bunch of people showing up next month. Don't do that. Yeah,
we can come then. We're open then as well.
We're not.
But yeah,
we're not ready yet.
Yeah, absolutely. So, do any of the callers have any questions right now regarding to financing, the tax benefits, establishing business credit, or startup type of questions? Definitely excited to start fielding some questions, and I think that will definitely help with the educational process as well, just to keep the phone call moving along here. Let's see if any of the callers or listeners have any questions for us.
Well, yeah, let's keep that out there and let them open up. But in the meantime, Eric, I'm going to walk through and ask a number of questions for you to kind of help a little bit. So let's start with what you addressed, one, the minimum of $1,000. what's the maximum? If I'm looking at a Snowy bus that's 73.5, and then there's some features and shipping and other things, I mean, you could easily run an $80,000 bill. How do you guys look at something like that?
Sure. So something like that, we are going to be capped with certain startups depending on the credit profile, because obviously when you're a true startup company, the bank is primarily looking at the personal guarantor's FICO score, and they do cap us. And it's going to be anywhere from $30,000 to $50,000 for a true startup business. And that's where we would be at. So you'd be looking at having to come out of pocket with a small down payment depending on which funding sources we were able to utilize. Now, if you're an established business, 2+ years in business, and you're a corporation, an LLC, even a sole proprietorship, our A-paper banks will have no problems getting those done with the provided the 2 years. Being an established business and good credit profile, with the shipping, the kiosk, that would all be financeable.
Okay, so if I'm an established business, that, again, I want to just clarify, an established means 2 or more years?
That is absolutely correct.
Okay. And then is there a limit at that point? You didn't give me a dollar. I mean, is
yep.
You be able to do the 80? Is there 100? Is that...
Absolutely, Lyle. In our funding sources, we can go north of $2 million, and we actually just got a $9 million request in this morning from one of the cities of our great country. I'm not going to name that city, but they basically, within their budget and the equipment that they need, we basically just pushed over a $9 million request to one of our funding sources, if that helps.
I don't think we're going to get too many requests for that volume. Nice to know it's there. Yep. You also talked about the 90-day deferred, and you threw a couple of questions in there. Well, actually, I take it back. I'm going to hold on that for a sec. Let's go back to that cap. That 30 to 50,000, if I'm a startup, is that cumulative total, or could you go to 2 different lenders at, say, 35,000 each and have a 70 total?
Correct, exactly right. So depending on what type of package your clientele would be looking at, if we were able to separate basically the kiosk from the equipment, basically we can't have a first and second on just the kiosk like you can a home mortgage. If it's just one unit, we can only utilize one funding source. But if we're able to break out the different ice shavers and equipment that's going to go into the kiosk, and the kiosk itself, we could utilize the 2 different funding sources then and possibly get up to that $70,000, $80,000 realm even for a startup company.
Okay, so we could do 50 for our base and then other stuff. So there are ways to work within those parameters and do that. Okay.
Yes,
on the 90-day deferred, you mentioned from receive date, and I want to clarify a few things that come up with that. Let's assume it's January. I know I'm going to need this in May to get up and running. And so I'm getting the financing in place. From the time you have a financing approval, is there a window where I have to complete the transaction? Now, can I float that for 60 days, 90 days before I have to take receipt of the product?
Yeah, absolutely. So once you have the open approval, it will stay active in our system alone for 30 days without being untouched. And depending on how we go about it, as long as I'm notating the account or one of the sales reps is, and we're in communications with our clientele, we're able to keep that open, and we can always ask for extensions on the approvals. Worst case scenario, all we do is park that application, basically. So let's just say we were doing purely educational and getting some ducks in a row, like you were saying, and we did that in January, but you knew you did not want to receive the equipment until June. We would basically get everything ready and let you guys know the payment terms and options and whether we were going with the 90-day deferred. If we needed to park the application until June, once they contacted us again in June, or we reconnect, I should say, we basically just reactivate it. We send it back to the credit department. They take a quick glance at it, and then basically we're ready to keep things moving forward at that point.
Okay, so and both, whether it's the reactivation or even the initial, if I apply, how long is it going to take me to get an answer from you on whether or not we're approved?
Absolutely. So for $5,000 and under, literally it can take as little as 30 seconds. For 5,000 and above, we're going to want to put our fingers in that a little bit more to make sure that we're sending it to the appropriate funding source to get you the best interest rate possible. So it can be very, very quick, and it can take just a little bit of time. Typically, the higher approvals don't take any more than a couple of hours into the very next business day if we don't get the approval back that same business day.
So it could take, under certain circumstances, up to as long as 1 day in order to obtain that.
That is correct for the higher dollar invoice transactions. Exactly right.
Okay, so using that kind of a replay on that then, some different ways that I could do this. If I bought the equipment or applied for the equipment in January, let's just say at the end of January, so we're now February 1, I have an approval. And I now have the month of February, or a 30-day window to complete that transaction without having to run it through all the credit approval again. And if I wanted to, at that point, I could take the 90-day deferral, so I don't have to really make my first payment until the end. Let's see, so we'd be the end of February, so it'd be March, April, May. I wouldn't have to make a payment until June 1st.
Correct, and it can be a week variance basically on either side. So when we say it's right about 90 days, because it's going to depend on when the deal got pre-funded basically, and we signed the contract and basically commenced the lease. So it's going to depend on the bill cycle date. So they go 90 days from that point, excuse me, that point in time. But if your bill cycle date falls on the week less than 90 days, it'll be just shy of 90 days, or it could go just longer than 90 days. It's going to depend on what bill cycle date you fall on with the bank, but virtually it's going to be 3 months either way.
Okay, so give or take a few days, but...
Exactly, if that makes sense.
Okay, and then you say that starts from the date the equipment is received. So what that means is, and I'm going to stick this in as kind of a caveat or to disrupt it a little bit. So we go through the process. We applied February 1st, and I signed the contract, and then Snowie doesn't ship for another 2 or 3 weeks to put it actually in their hands.
Yep, and that is absolutely correct. So if their bill cycle date, say we filled it out on 2/1 and it took you guys 3 weeks to complete the build and a week for them to get it shipped.
Let's do it different. You got an approval, but I don't sign the contract till the end of February. Okay. And then it took 3 weeks to ship, so I'm now the 20th of March before I receive the equipment. Is it 90 days from March 20th?
From their bill cycle date, right, because the lease does not commence until they receive their equipment. So they would have gotten their first payment taken out, which is what becomes their bill cycle date through the funding source, but their normal payments won't start until after they receive the equipment, and that's when the 90-day clock starts.
Okay, but they are making one payment up front.
Not on the 90-day deferred. On a normal lease-to-own program, that would be the case, right. So, and I apologize, that was a little confusing on my part. So it's the same process with the bank. Once we get the approval and the client signs the contract, the bank gives them a call to do what we call a pre-verbal verification. That's to make sure all of the information on the contract is accurate and the client knows exactly, they're basically given the nod of approval to commence the lease. On everything but the 90-day deferred program, it's typically one payment down. On the 90-day deferred program, there's no initial out-of-pocket costs, but it's right at that phone call when the lease commences, but their normal lease payments won't start until after they receive the equipment. Does that make sense?
Yep. That was what I wanted to clarify.
Yeah, I apologize for that.
No, that's quite all right. What options do we're sitting here talking about a 90-day option, but what options do I have in either beyond the 90 days or in normal parameters? I'm a startup, and I apologize, you may have even said this, I can't remember. What was the qualification for 90 days? Was that for established businesses or just about anybody, or was it drip credit?
Yeah, absolutely. So it's for just about everybody. Now the bank does look at each deal on a case-by-case scenario. So it is on approved credit, but in all honesty, basically, I will say 90% of the clientele will qualify for the 90-day deferred. But unfortunately, for like the 580 FICO score, 1 day in business, and as a bankruptcy that's been discharged recently, they may not qualify for the 90-day deferred program. Even though we were able to secure some money for them, they would have the normal lease-to-own structured programs or dollar buyout structured programs. They just would not get to take advantage of the 90-day deferred.
Okay. And in a just the vein to be full disclosure, while there's no payments, is interest still accruing during that 90 days?
Great question. So everything that we do here is lease-to-own structure. So there's no separation from principal and interest like on a home or an automobile. We do commercial financing here, the same as Paramount. So it's simple interest and it's a finance charge. So you're going to pay the same sum overall total, whether you paid it off on day 1 or month 24 if it was a 2-year term. If you called in halfway through the term, basically the payoff is those last 12 months, and that would be the principal balance due. The reason being for that is Section 179 through the federal government allows us to accelerate the depreciation of the cost of the goods, the interest, as well as the sales tax because we're doing commercial financing. So it's not like a traditional loan where if you pay it off early, you get to avoid that finance charge. Does that make sense?
Yes, and that's really what I was trying to get was to explain is that kind of just reiterating what you're saying. So if when I buy this, I'm buying a contract that's a 2-year contract regardless of when I pay it off.
Absolutely right. And it's
and a lease is different than a loan because I get to write off that entire amount day 1. Or like if I buy it in 2014, I get the entire deduction in 2014 of, say, a $25,000 loan or $25,000 equipment. I get to write off the entire $25,000, even though I may have spent, say, $5,000 in actual payments.
That is correct. And yep, you get to accelerate the depreciation. And so the government has this year they were thinking about not even renewing that tax benefit, and it was set at $500,000 last year. In 2013. However, in 2014, it is capped at $25,000. So if the cost of the equipment is $25,000, that's all you're going to be able to write off. Say, for instance, they bought a cheaper kiosk that was only $10,000 and a couple of shaved ice machines, and it basically bumped it up to $5,000. So it would be a total of $15,000. They would still have another $10,000 worth of interest and sales tax that they would have the potential to be able to write off on year number 1.
So I didn't know that had been reduced. So if I bought a $30,000, if my total was shipping everything was $30,000, I would only be able to write off $25,000.
And then you would have to depreciate the other $5,000 over the 5-year span as normal protocol.
Dang. That's for 2014?
Correct, and we're hoping they extend the same thing for 2015.
Most interesting. Okay. Didn't know that. Aaron, have we gotten any other questions? I haven't been watching.
Yeah, sorry, I had to unmute my phone there. So I've got a question. What is the average interest rate for $5,000? Obviously, so we're going to have to average a credit score, stuff like that. Can you ballpark that?
Yeah, absolutely, and I can basically give you guys kind of a range. So if it's a true startup business and they've got 700 plus FICO scores, we're most likely going to be looking at like the 12 to 15%, just solely due to the basis that the bank is looking at it as a true startup business. Now, if they've got the other end of the spectrum or totem pole, if you will, and it's a 580 and they have a bankruptcy on records, they could, in all honesty, end up paying in the high teens, low 20s.
Okay. And for an established business, does that change, or does it stay to the rates that you previously mentioned?
No, yes, it absolutely changes drastically, just as any business does and any financial institution when you're running your own entity and trying to get loans. Those first 2 years are the hardest. It's the hardest to keep the doors open. You can't get any financing secured. If you do, it's going to be at a high interest rate, just like when you turned 18-year-old and got your first credit card, it's up in the 29s or the low 30s. So once that business has a 2-year, their second birthday, if you will, and they become an established business with a solid personal guarantor or business owner on there, we can get the interest rates down as little as 5.5%, 6%. Depending on that scenario. So I would say on an established business with a higher ticket item, if we're sending those to our true A-paper banks, and depending on if it's titled or not, we're basically going to be looking at probably a 5 to a 13% type of range over those teen ranges.
Okay, great. And then also, I know this question hasn't come up, but I know it did quite a bit, and it still does as people call. Explain how the lease to own works. I only bring that up. Like a lot of people, it'll put their gut to be like, I don't want to do a lease. I want to own it, and explain to us the benefits and the difference.
And great question, Aaron, and thank you for bringing that up. So the way that the contract is written and the way that we set our financing up, it looks, smells, and feels exactly like a loan. However, the verbiage in the contract is written just slightly different, and that is how we're able to call it a lease-to-own structure. So say, for instance, on a 2-year program, that's truly 24 payments. The way the contract is going to be written is it's 21 base payments or 21 lease payments of, let's just say, $200. Okay, and then right below that it'll say fair market value of $600. All that fair market value is your 22nd, 23rd, and 24th payment. It is not a balloon payment, and your payments never change. Those last 3 months is truly the fair market value buyout. At the end of that, you own the equipment outright, and that's how we're able to take advantage of the tax benefits and do the commercial financing and leasing that we do with the parameters that we do. Is the relationships that we have with the bank, it's basically just a restructuring of the verbiage in the lease contract so that we're able to call it a lease. But again, it looks and feels exactly like a normal loan.
Great. And then, and I know Lyle kind of brought this up, just he was talking through it, but I want to verify shipping cost and everything can be a part of this, correct? You don't exclude shipping?
That is correct. So we have a variance, and again, that's going to be depending on what funding source, anywhere from 10 to 25% to include the shipping and some small costs or soft costs, if you will. And that's something that basically between you and I as the vendor and the funding sources, well, basically we take care of on the quoting of the matter, and then the banks also have variances so that we're able to include that where most companies cannot.
Correct. So that would be supplies. So if I wanted cups and concentrates as well as the shipping cost, and it's more than just equipment only, and that's the key.
That's correct, yeah. Consumables are not financeable, like some of the flavoring and stuff like that. But again, we have that variance, so it's going to be the way that the invoice reads, and basically the variance that the funding source allows us to take advantage of. And we go over all of that in great detail once we got the application and the approval on hand and got the quote on hand, to be able to let the end users know up front right off of the bat so that they're not blindsided exactly, if any, what they would be coming out of pocket with. In most cases, it's zero.
I want to walk through one of the things I see surprises people that they don't expect. They hear this 24 hours approval, or a few minutes, as you said earlier. So I applied today, and you get it approved. Does that mean Snowie, if they had the equipment in stock, could ship tomorrow to me?
Yes,
I'm
absolutely.
That answer is, but walk through for me the process. Is, okay, it's approved. Now, what has to be done paperwork-wise, and what's that length of time?
Absolutely, and that's wonderful. So I'm going to go best-case scenario between the Snowie, Lease Station, and the client. If everybody is on board, eager, and ready to go, and we get the approval on hand, you guys get us the invoice. We go over the terms with the client, and they accept. We can literally have docs out within the hour. if they send them back, say 10, 15 minutes later because they were in front of their computer and hot to trot, ready to go, as soon as they get done completing the DocuSign email and the contract, it comes right back to us. We could send it over to the bank and, in a sense, have that pre-verbal phone call done that I had mentioned earlier in the conversation. We can have all of that completed on the same day and have the wire released to you that day to where it would either hit your account that afternoon or the next morning to where you would be shipping that in less than, let's say, 32 hours. Typically, it's about a 48 to 72 hour range. With us, even if we're totally on board, it's just a matter of when we get the documents back from the client. That's usually the most lengthy part of the process, basically from the time that we get the approval to setting the terms and us getting the docs out. As soon as they come back, we send them over and get you guys paid. So if you have it in stock, it can be as little as a 1 to 2 day process.
So a key point in there that I think is very valuable to emphasize is most companies, they approve it, then they overnight the paperwork to you, you look it over, sign it, and send it back, and they don't want to process it till they have the actual original signed documents, what they call wet ink. You're doing an electronic signature, so it's not being sent to me that I have to print it out, sign it, scan it, send it back. I'm able to do a full electronic signature.
That is 100% accurate, and that is correct for, I would say, 90% of the transactions, depending on what bank we send it to. But that's something where we changed the dynamic of leasing, and being able to launch DocuSign about a year ago absolutely helped our business grow and thrive, as well as all of our vendors, and help increase their sales and ultimately get all of the clientele their equipment in a much, much faster basis, because we're all electronic and we're not depending on FedEx, UPS, or the U.S. Postal Service. It's literally, we send you an email, you answer a couple of personal security questions, and you just point and click. Everywhere there's an X, you click it, it'll drop your signature, initials, or a date, and you complete it, and as soon as it's completed, you don't even have to resend it back. It knows it's smart enough in the system. It comes back automatically, which is how we're able to expedite all of our transactions.
Now, one of the things people ask when they start seeing this, because this is a relatively new aspect of technology, is this e-signature. And the courts have finally started accepting it. How secure is this, that I'm not having somebody that's getting it and saying yes, that they sent it to the wrong person? You know, I don't want somebody using my information and doing an electronic signature and it's not really me. How do you monitor and protect that?
Absolutely. Well, first and foremost, the company DocuSign does a fantastic job, and they wouldn't be in business and be primarily the only electronic signing document company out there that, like you said, the government and the banking regulations will allow to be completed, such as that. And they do a great job. Those personal security questions that I had mentioned just a moment ago, they basically take like 9 questions off of your credit report, and basically ask you personal questions that only you would know, like, have you lived at 123 Sesame Street, or have you owned this type of vehicle, or have you had this type of loan? And those are questions that only you're going to know, unless it's truly a case of stolen identity, which then that's hard to crack. But between us doing our due diligence and making sure that we're dealing with the actual entity or end user, we gather proof of business, and through conversations and verifying addresses and stuff like that, we don't have very, very much fraud at all.
And that's what I want. I just want to get people familiar with that this is a well-planned out, well-documented, and very safe program, that because it's new to the public, it's actually been around for a number of years and is expanding and gaining ground in many ways because of its speed and simplicity. Another question, you've talked about terms, and we've been talking about throwing out the 90-day deferred, and you talked about a 1-year term. What are the terms that are available to me when I'm buying equipment?
Absolutely. So if it's $3,000 and above, we basically have a 1 to 5 year option, just like pretty much any traditional financing company. If it is $3,000 and under, the only thing that we lose is the 1-year program or baker's dozen. And I do want to be clear, just right off of the bat, for the clientele on the phone and all future clients is the 1-year program is truly a 13-month program. They call it the baker's dozen. So just like when you go to the donut shop and you get the baker's dozen, you get that one extra donut. That's basically how the bank makes their money, because there's very little finance charge in that 1-year program. So they basically make one extra payment on it, and that's when the product truly becomes yours. That's the buyout portion of the baker's dozen, to where we still get to call that a lease and not a loan as well.
Okay. Now, you said, so on the under 3,000, it's a 1-year only option.
No, that's the only program that we lose. So it would be a 2, 3, 4, and a 5-year option if it's 3,000 and under.
Oh, okay. Sorry. Got it. So 2 to 5 year for the under 3,000, 3,000 over, I can do a 1 to 5.
You got it.
Okay. Do you offer any kind of a seasonal option?
We do, and we're actually in the midst of kind of changing that a little bit and trying to get the months that are the lower payments actually extended. So we're in communications with our funding source right now to make it even more convenient for the clientele. But basically that program is set up to where the summer months, where obviously, especially in your industry, you guys are thriving, and then to where the fall and winter starts hitting and you're making little to no income. We know that the business owners are going to probably be cutting that monthly payment out of their personal checking account. So it basically is a fraction of the cost of what the traditional payment would be. And then, of course, it's going to be a little bit higher than what it would be if you took the traditional loan program just on a non-seasonal payment. The payments are going to be a little bit higher in the summer, and the spring and the summer, but it does give you relief in the fall and the winter.
So it doesn't go away, it just simply reduces the amount.
That's correct.
Some companies will do a no payments for 6 months, but you pay double in the other 6 months.
Right, yeah, and we call them almost a touch payment, if you will, Lyle. It's a fraction of the payment to make sure that the balance is still coming down, and the monthly payments for spring and summer aren't so absurd that it doesn't make sense to do it. So it's basically just a reminder to keep making that payment, even though it's a fraction of the cost, and it does help the overall balance keep being reduced. And then that way the machine is hopefully paying for itself year-round. Hopefully when the payment's a little higher in the spring and summer, but the machine is paying for itself many times over and generating great profit for the clientele, but they were able to save up enough for the fall and the winter that those little touch payments aren't going to make or break the bank, so that they're ready to hit the ground running come next springtime.
Yeah, I'm going to throw a kind of a what if at you. Let's assume I'm buying a 3,000 or a 1,000 shaver and a tabletop flavor station. Cost is about $3,500. I've got a 650 credit score. Do you know, and I'm going to finance it, say, for 2 years. Do you know approximately what that rate would be?
I don't. So for 2 years, yeah, and I'm sorry.
I'll let you pick something easier. I should have prepped you for this one. Sorry.
No, and that's quite all right. And I'm going to try to do it off of memory here, because I'm obviously staring at the webinar right now and don't have access to my system without losing you guys here.
I understand
but
that.
But for $3,500 and on a 2-year program, 650 FICO score, how long had they been in business? Are we talking startup?
Let's start startup.
Yeah, startup, again, you'd probably, on that realm, you'd probably be looking, I would want to say about a 15 to 17% interest rate, somewhere right around there for a true startup. And the payments, I don't know. Yeah, and that's what I don't know. I would want to say for $3,500, you're probably going to be looking anywhere from like 80 to maybe 150 bucks at most.
Okay, so if we took the 150, let's place the worst case scenario. So that means that I would have to, over the course of a summer, to simply make my payments. I'm doing 150, that's $1,800 total profit for the summer to cover all my payments for an entire year.
Correct.
And that's if you're not making $1,500, we got to work on the marketing side a lot better. Because that's, and I want people to understand, that's very doable. You can go to a soccer tournament and do that much in a day and more, and you can make that much profit in a day. And so it doesn't take a lot to be able to put that out there. to start making those payments. Sometimes people think of these costs, they hear a 17%, and don't panic at that, because the ability to generate the income, and that's what makes our product so viable, is its ability to generate significant income levels back to folks to be able to make those payments. So
and you hit that right. I'm sorry, Lyle.
No, I was just saying thank you for clarifying that. I just wanted to get that.
Oh, no, yeah, and I apologize. I thought I was cutting you off there. But, no, yeah, and Aaron had just shot over to Colton some monthly figures on average on what the different type of equipment that you guys have that will generate. So once we do get our true Prezi up here in the next week or two, and we'll have a slide on that, but I wouldn't even mind even having a tab or adding it to our finance page, but a little graph on return on investment for what the average payments are, and we're going to look at it worst case scenario, so that your end users can get a very solid business plan even before applying. They can get a general idea of, hey, this is what the payment may be. Wow, that kind of looks high, but wow, this is going to generate me an extra $2,000 a month on top of that payment. It's very doable, and you hit the nail on the head. At that point in time, the business owners got to stop thinking about interest rate and really start honing in on return on investment, and what is this product going to generate me, and how much business am I actually going to be able to conduct and produce.
And for those, as you're listening, I'm going to verbally give it to you here, but I'm also going to type it into the message thing. If you wanted to email me, I have a spreadsheet that looks at 3 different ways of doing business that you can put in and manage all the details you want. It's Lyle@snowie.com, and the spreadsheet allows you to go in and say, how much money can I make doing buildings if I'm doing a stationary location? You know, if I do $200 a day, $300. Now, Aaron's pulling up the one on our website you can go in and look at, but this only allows you to play a little bit with what's the small, medium, and large cup going to cost me, what's my sales per day, and what's my rent. What we have is a spreadsheet I can email to you that allows you to go in and play with, okay, if I'm paying this amount for sugar, I'm paying this amount for ice, I'm paying this much for a cup, a spoon straw, a napkin, I mean, literally every single factor in there, you can go in and play with it. But if we do it for the buildings, those station locations, we do it for our kiosks when you're doing events, and we have one built entirely around the bus. So if you're interested in something like that, email me, and we will can email that back to you and let you go in and play to your heart's content to see the profitability. But to give you a rough number, if you go back and watch webinar number 1, our very first one, we actually walked through those numbers, and you'll see that the profit on the product, you're about 88 to 90% profit, and about a 10 to 12% cost of product. Now that obviously doesn't factor in rents and event fees and those kind of things, but on the product itself. And so those are very helpful if you're interested. Eric, I'm going to just jump through a couple of questions that are being thrown out there by everybody to make sure we address them to the group. Somebody asked about financing the buses. Again, the answer was the max really was up to about $50,000.
For a startup business,
What's that?
That's for a startup. Let's emphasize that.
Right. For a startup, up to about $50,000. If you've been in business 2 or more years and a decent credit score, we can get the entire thing financed.
Absolutely. Yep.
The other question came up: will we? Can't even talk. Financing outside of the U.S. Now let's deal with. I know you put that on there, but I want to clarify. What does that mean? U.S. Is that just the contiguous U.S. or
Correct.
Does that include Canada, Hawaii, U.S. territories? Where do you draw the line?
Absolutely. So it is the continental U.S. here within the mainland. The funding sources have to be able to, if heaven forbid anything did ever happen, go sideways, they need to be able to cheaply be able to go get that equipment back so that they can resell it and pay back the loan, if that makes sense.
Okay, what about, so that's continental U.S., so that rules out Hawaii.
Yeah.
I was so willing to go over there and get anything.
And we told the banks the same thing. I'm like, we'll pick up the tab. We'll go over there and get it as long as they'll pay for shipping.
Yeah. What about Alaska?
Alaska we do, and Canada we do not, unfortunately, nor the Virgin Islands.
Okay, Puerto Rico?
Nope, unfortunately, we had that same
so
conversation.
That's why I just wanted to emphasize, it's got to be the continental U.S., and
Correct.
there's no exceptions to that. So, okay, just wanted to clarify that detail.
Yeah, no, thank you. These are all great questions.
Aaron, was there anything else you had?
No, I was going to touch on those as well. I wanted to expand on the bus because there's going to be a lot. I mean, primarily. Oh, here's a good route. So basically, if somebody comes to you and they want the bus, and you're like, okay, look, you're a startup, you're only going to be able to do like 50,000, and we're kind of talking about that there. But do you actually give somebody a peak number for them? So say there's somebody who wants a $30,000 package and I'm going high on that. Maybe I bring it down realistically. So we're about $25,000 to be able to like have everything in an 8-foot building, something that you would put in front of a supermarket, and they don't qualify for that for whatever reason. Do you go to them and then say, well, but you do qualify for $11,000. Let's look at some options with Snowie and see what we can do at the $11,000 mark and get you started. Do you approach it like that, or do you just say, no, you don't qualify for $25,000, bye?
Absolutely great question, Aaron. And it goes both ways, in all honesty, from the bank. If they are able to secure or willing to fund or secure any financing for them, they absolutely will counter. So if they're going for 20 and the bank only feels comfortable securing, like, let's say $11,500, they will counter on us for that. But again, that goes back to us being the one-stop shop. We are absolutely consultants here, to where we will assist and help and talk to the business owners about going through the SBA for the remaining portion, their local credit union, their local financial institution, and trying to split up the different types of financing, because again, we're commercial, so the way that we underwrite is completely different than the way that they do with personal or consumer type of traditional loans or small business loans. So we will absolutely try to be creative and think outside the box and be consultative to help them get all of the financing that they need. And here we try to get them everything that we can here. We'll assist in going those other avenues, and then we'll let them know what, if any, they have to come out of pocket with.
Let's do the reverse of that, because there's times when I've had people that are looking, they want to go, okay, what do I need to get started? And they might say, okay, I want to do a cart and a flavor station. I'd love a kiosk, but I don't know that I'm going to qualify. Let's do a cart and a flavor station, and a cart and a shaver, and the cost is $12,000. Does the bank ever come back and say, "Oh, you're approved for $25,000"? And then the person can go, "Oh, well, if I can get $25,000, I'll go ahead and go with the kiosk."
That's an absolute, yep, and that's a wonderful question as well. And again, that is exactly why the applications 5,000 and above don't go directly to the bank. That's why we put our fingers in it, because we need to be able to call the clientele, have that discussion with them. That's great. I saw in the application, because our buttons are smart enough to pull over the equipment description on what product they were looking at. So when we get them on the phone, we absolutely ask them, is this exactly what you were looking for? Because this is what we think we may be able to get you approved, or to let me know, because we basically tell them, let's shoot for the stars. If we land at the moon, that's fine, but we're going to try to get you everything you could possibly want and need that's business essential, and that's going to fill your wants to be able to run a successful business. And that's why we have those conversations, so that when you guys send over the quote, it's everything that they could possibly want or imagine. And then we have the bank, if they do counter us and we need to work backwards, we always want to do that first. We always go and ask for the highest approval that we can for 5,000 and above, and then if we have to, we work backwards, or we add cosigners, or we find alternate funding sources as well through the SBA or other financial institutions. Is that helpful?
Okay, yes, and you just threw something in there, because if somebody does come in and they don't hit the qualifying due to a bad credit score or something like that, you do allow a cosigner to help improve the volume or the dollar amount or even the pricing structure.
Yeah, that is exactly right. And just like Aaron's question where he said, sometimes do they just come back specifically declined? And that does happen, but our reps will absolutely get on the phone and the client will get an automated email immediately if they get declined, talking to them about the cosigner options as well as the cosigner credit application and the necessary steps and information that we need to have on hand so that they can literally, if they get declined, fill that stuff out, send it back to us, and we can have a new approval within as little as 2 hours. And we also call on all of the declined apps, or we try to, I should say, to ask about that cosigner to follow up with the email.
Okay. Another question on whether or not I'm an established business. I'm going to throw two scenarios at you here to make sure people understand the distinction and understand your viewpoint. Startup is, I lost my job, I need to do something, I want to go get in the snow cone business, so I buy this. That's a startup, obviously. But what if I own a print shop, and I have this big parking lot out front, sits on a busy street, I think I could do snow cones, and I want to buy a snow cone stand and put it out front of my printing business. How do you look at that?
Absolutely, great question. So in all honesty, because we could explain to the bank that it makes business sense and that all you're trying to do is increase your revenue by utilizing the assets that you have and now are trying to purchase, we could get that done and you would be considered an established business. We can even do cross-corporate guarantors. So say, for instance, you had a restaurant and you had been in business for 2 years on one location, but you just bought out somebody that was 3 blocks away. On the new restaurant and new location, you would be considered a startup business. Even though that business may have been around for 8 years, you're truly a startup because you just purchased that, and the time in business, the clock starts over when you do that. However, because you have another existing business, we can go to the bank and use your other existing businesses as a cross-corporate guarantor to help secure the financing for that as well.
Oh, that's interesting.
So it doesn't have to be a related. Like the third scenario in there is I'm in the kettle corn business and I want to add snow cones.
You got it.
Obviously, that's an easily related. So it doesn't have to necessarily be a related business to the snow cone industry.
Correct.
Or correctly, the concession industry.
Right.
Hey, so there is a question, and to me, I think you already answered it with that last scenario, but Marcia's asking the question, what if I had a business that we had for 2 or 3 years, we had to sell it due to an emergency, do they count like a past business, or is like, nope, you're a startup again now, like you were mentioning?
Right. So in that one, that kind of gets hairy, and that's where we, I guess we really would have to dig in. If they truly sold it and had to go file for a new EIN, or if they incorporated under a different name, the banks would look at that as a true startup because it's a new entity. Now, if they stop doing business for 3 to 6 months because of extenuating circumstances, and then they were able to reopen the doors, and we can basically prove that the business was never dissolved, it just wasn't functioning or being profitable for X amount of time, then we can go back for a backdated to day one in business, so it would be considered an established business. That kind of stuff, that's a case-by-case scenario of what we're able to dig into and the information and documentation that we're able to provide to the underwriting sources.
That brings up, you threw something in there about having to apply for a new EIN or an employer identification number or federal ID number. If I apply for a new one, is that always, even if I have the two companies are interrelated, would that still be considered a startup?
Yes, because you just qualified for it. But again, if you were doing that and you had existing businesses, we would look at the full picture of that and try to paint the prettiest picture.
So that's where you talk about the cross-corporate. Yeah.
Exactly right.
Okay. I just wanted to clarify that.
Okay. So we pushed that past an hour.
Wow.
Are there
it took
another
15 minutes to get started.
Time flies when you're having fun.
Yeah, no, it was a great conversation. Very informative. I think I said whoa about 15 times. I don't remember doing that before. So
that makes me happy to hear that, Aaron.
So if there's any other questions, drop them in right now, and we'll touch on those quickly. If not, we'll draw it to a close, and then obviously you'll be able to always approach Lease Station. You can click Apply Now. I don't know, do you guys have information out here where they can contact you? Right. Oh, no, that's us.
But we can change that, Aaron, if you would like that to be our number, or if on the landing page, because I think your programmers, I think you said his name was Jason, did that, you can absolutely have them put the phone number on there for Lease Station so that they can call in directly.
Yeah, I think we need to do that so that, because people will start calling and asking us about financial terms, and we're just like, you need to ask. You'll need to ask Lease Station. So, yeah, we'll get your number up here, and if you want to put that out right now, you mind just saying that, how people can contact you?
Yeah.
No,
okay, so I'm gonna, yeah, no, and I apologize. I was going to get the direct sales line, but for now, for everybody on the line, my direct line is going to be 480-999-1656, and again, that's 480-999-1656.
Perfect.
Eric, and we had a couple of just quick questions come up. Do you require any kind of a security deposit?
So in some cases, the banks will ask for them. Sometimes it's 5%. Again, with the 90-day deferred program, usually if there is a security deposit up front, that would be required. But with that program, there's usually no initial out-of-pocket. On a traditional lease-to-own, it's usually your first payment in advance. So it's not a security deposit. It's actually your very first lease payment in advance, and then they don't commence until you receive the equipment. And that's something that we'll go over in great detail once we get the approvals on hand and make sure we're setting proper expectations.
Okay. And the last question is there a down payment required for startup financing equipment at the minimum $1,000? So somebody wants to buy $8,000, is there a minimum or a deposit or any payment required up front?
Again, usually it's just if we can get that done on the 90-day deferred program, there would not be. If it's on a traditional program, it would just be that first payment, which is going to be very, very cheap.
Okay. So it's really just the 1 month payment.
Usually, yeah, 1 month payment up front is usually all that's required for the security deposit, or I should say for what you would consider a down payment, yeah.
Yeah, which is truly just the first payment.
Exactly, yeah, and some instances the bank will ask for two, like a first and a last rather than a security deposit. But again, we don't know that until we get the approval back from the underwriter with all of the payment terms and options, and that all happens after we receive the quote from you guys and send it back through for final review. They send over the payment terms and options, and that's when we're able to go through the plethora of different options that the clientele will have.
Okay, so a lot of it is just dependent on the specifics of the terms and the qualification and who the underwriter is on the loan.
Exactly
the lease,
right.
Rather. Okay. Excellent. Well, Aaron, I think I'm talked out.
Yes. So I just had the question, and I was actually going to touch on that again. It says, will you guys be at the February class? The answer to that is yes. Is interest a lump amount then spread over the term? That was basically a yes, correct?
Correct, yeah. So exactly right. The finance charge is predetermined. It is what it is. It's simple interest, and then it's basically just spread over the payments. Exactly right. And
again, touching on that, I'm going to go over here and click on that banner. Remember, we do have a training the 5th and 6th of February. This was awesome. We got nothing but incredible feedback on this from everybody who attended last year. So if you're looking at getting into the business or if you're looking at expanding your business, come to this. And the folks from Lease Station will be here. If you think it's fast over the phone, wait till they are here in person with you working through that loan. That was one thing that came directly from Colton. He was like, dude, we will we'll be able to bang it out.
They'll have their laptops there ready to finance you on the spot before you can get out the door.
We sure will.
Okay. And then somebody asked me when I post webinars 20 and 21. I just did 21 this morning. It is posted. 20 was an awful mess. I'm just not going to post that one.
That one got lost in cyberspace.
Yeah.
The cloud consumed it and rained on it and electrocuted it a few times.
Yeah. So we're just leaving that one alone and continuing on. So, okay. Well, thank you, everyone. What's that last?
When are we? I'm sorry to cut you off. When are we posting number 22?
22 will be posted. Actually, I got a nutty day for
Wednesday?
the rest of the day. It will probably be posted tomorrow. This one will be a quick one.
Okay, let's be realistic.
The other ones I have to edit. No.
Well, it usually takes 3 or 4 days. I'll bet it's not up till Monday.
Well,
you guys are awesome. I was just playing around with you guys. You guys are awesome. We love what you do. Again, we are very excited to be here, and thank you very much for partnering up with us and giving us the opportunity here to serve your guys as clients.
And to all of our customers out there, thank you, and we're looking forward to putting these guys to the test and let them, as the saying really applies here, put your money where your mouth is.
There you go.
Let's give them a good shot at it and let them prove themselves.
Sounds great.
Thank you guys very much. Everybody have a great day. Thank you, gentlemen.
You as well. We'll see you.
Take care, guys. Bye-bye.
Bye-bye.